Hey guys, so today I wanted to put my strategy out there because I know it can help someone who is trying to trade Forex. And for me, I've been concentrating in one currency. In the beginning, I was all over the place. That doesn't mean that this cannot work anywhere. I was trading GBP USD, Euro USD, and it was performing really well. So I tried it on gold because everybody nowadays we love gold because we know how much money it can make us. And first, I want to give a disclaimer. Forex trading is very risky and you can lose a lot of money in Forex. So I don't want you to use this as a guarantee strategy. You can lose money, so you need to apply proper risk management and you need to take care of your capital. Always secure your capital first. So going on, we need to know the indicators that I'm using. The white EMA is the 200 EMA. The blue EMA that I'm using is the 50 EMA. So this is very common. A lot of people know it. It is called the death cross. When the 50 and the 200 EMA crosses, they call it the death cross. So with this, what am I looking at? With this, I'm looking at the 15 minutes. Most of the time, you don't want to look at a higher time frames because higher time frames means that you'll have to wait for long. Unless you are a swing trader, using 15 minutes is okay because this is what I use. Other people use the same strategy in 5 minutes, in 1 minute, and it's good. It's still working in any time frame. But for me, I like using it in 15 minutes because it's good. And there are few crosses, and when they cross, you know it's a guarantee. So one thing that I've learned with Forex, one, you need to be very, very patient. You need to be very, very patient with whatever you are doing. You need to be very extremely patient. You know what you're looking at, where you're waiting for the market to come so that you can take your trade. So let's start with where the market is at right now. So first we have this cross, the 50 and the 200 crossed. That is not where you're taking your trade. So this happened, right? So the 50 and the 200 crossed. So what are you looking for? So when this EMA crossed, there's something that you're going to wait for. You're going to wait for this market to come back to the 50 EMA. So you can incorporate fibs where you take from this low to the high that will be created, and you see the retracement to the 50 EMA. So here is where we will be looking for our trade when the market comes back to the 50 EMA. So when the market crossed the 50 and the 200 has crossed, so you're waiting for the market to come to the 50, you take your buy from here. So this is what happens, and for every cross it is good to take a maximum of 2 trades, and that's it. So you see here we had the 50 and the 200 EMA crossing, right? It crossed here. We had a pullback to the 200 EMA and we sold. We have another pullback to the 200 EMA, we sold. We have a pullback to the 50 EMA where we sell again. A pullback to the 200 EMA where we sold, but we did not take this low, meaning we have not formed a lower low. This market, when we do not break this, that's an indication that we are going up because we did not take this low which we were anticipating to take. So, and then the market turned. So now we have said we are looking for a pullback to the 50 EMA and a pump. You can see here we had a cross of the 50 and the 200 EMA, which happened here. A pullback to the 50, we buy. A pullback to the 50. Sorry. So here is where it happened. We had the 50 and the 200 crossing. A pullback to the 50, we buy. A pullback to the 50, we continue buying. A pullback to the 200, we buy. We keep buying because what? We have the 50 and the 200 the 50 is above the 200, so that tells us that the market is still bullish. So what happens when let me be very clear, this is what I use, the 50 and the 200 EMA, that is what I use. But you can see sometimes we have some pullbacks that when the 50 and the 200 have crossed, sometimes we have the pullback to the 50 and you're like, that is why I'm taking my trade. But there is one thing that I want to note, like here. Let me see. A minute. Can we get there? Okay. What I need to say is sometimes the 50 and the 200, we will have a pullback. Sometimes it will get to the 50 because we want to buy at the 50 when the market pulls back to the 50, because it will either pull back to the 50 or pull back to the 200. So what will be an indication, like we are not pulling up to the 50, we are pulling up to the 200. So one thing that you can incorporate, you can add the 9 EMA. So by adding the 9 EMA, let me add it. I'll put it another color because it's blue. Which color can I put? Let me put purple to it. So you see, I don't know. I'm trying to pull it back. This is where I want us to look at. So you see the 50 and the 50 is still above. We pull back to the 50, but you can see the market never closed above the 9. It tried here, came, and we fell. So what we are looking at where the market is. We need to be above the 9 EMA. So for your trades, you will be looking at the 50 and the 200 has crossed, right? Yeah. Then you see the way the 9 EMA is holding this market. You see the way the 9 is holding this market. And we have a close above the 9, and that is how it invalidates the bearish momentum. But when the market is below the 9, you know you are good. When the market, like here, we have the 50 and the 200 crossed here. And you see the way the 9, now you need to take a trade when this crosses below the 50. And it does cross here. When it crosses, you need to take a trade. So you take a trade here for sell, stop loss above here, and you hold this market. You hold it. Here it did not cross above the 9, so you hold it until you see a close above the 9. You get out of that market. So the 9 EMA acts as a very good filter. So you can try this, incorporate it to your SMC or whatever you are using. If you're using SNL, incorporate it and see how it's going to guide you. Because I've seen in 15 minutes, it works so well. You see the way the 9 is holding the market. And then we came down here. And then we went above it again for a buy higher. With this, you can add also the 21 EMA. Let me add it to see how it's going to. So there is something that I learned way late. I can say I learned it later. Like the 50 EMA and the 200 EMA are good for direction purposes. They're going to guide your direction. The 9 and 21, they're going to be your intraday. You're going to use them for entries. So as long as these two have not crossed, you are still looking for bullish momentum. Until they cross, that's why you're looking for a bearish momentum. But these are going to be giving you your long-term momentum. What is the momentum here? The momentum is bullish, so we are buying this market. So until we get these two crossing, now the high time frame has indicated like we are bearish, but currently we are very bullish. I'm going to be talking about how I use these EMAs, and if you are interested, you can be checking, because I've seen this is very good. I wish I had this information when I was starting, because a lot of things are out there. You get a lot of information. Sometimes you get into researching a lot of things and they are just junks, and they do not help you in any way. You try, you keep trying, you keep trying, you fail, you lose a lot of money. Like for me, I just knew the 50 and the 200 crossing, that's it. I put money. And for retail traders, we do not have that much. That's a lot of money to waste. So when the market is experiencing a pullback, for me, I want to buy at the 50 EMA when the market comes back to the 50 EMA. But sometimes I would buy, it comes to the 50, we get a very nice pump, and that's it. And I make my money, and it's good. I saw that happening the first time, the second time, the third time. I would see it, and it was so nice. Until one time, we were now pulling back to the 200 EMA, and where, let me tell you, I lost some good amount of money, because we came back to the 200 EMA. I was holding on to my losses because I was like, it's just going to play around the 50 EMA and that's it, and we are going. But it ended up pulling to the 200 EMA, and I lost some good amount of money. So I don't want you to experience the same. So for me, I would recommend a filter of 9 and 21 EMA to show you like what is the immediate trend. What is the immediate trend? Like this is the thing that I'm trading right now. So what is going to give you your long-term bias is the 50 and the 200. The short-term bias, you're going to be using the 9 and the 21. That one is going to be giving you your intraday trends, because most of us are intraday traders. So with that, I think I'm going to leave it there. It is good. I'm also going to show you, like, if you're a swing trader, how are you going to use these EMAs in higher time frame? How are you going to incorporate them? How are you going to use them to your advantage? So we are going to do that. And this, I can say I use this in gold, because currently I'm not trying to fix myself with other currency. I've found like gold is a good place to be. And if, in case you're trading gold, you can try to incorporate this to whatever you are doing. Just try to put it there as a filter. Whenever maybe you're using order blocks, maybe you're using whatever you're using, maybe you're using supply and demand, you can use this as a good filter. You see, it's a good filter for you. So whatever it is that you're using, you can use this EMA as a filter. I would also recommend, like, if you love BTMM, it's the same thing, but BTMM, they use the 5 and the 13 as a filter. So I wanted to put the 5 and the 13, but you can use whatever it is that you're using. Ensure it's something that can lead you to profitability. But the 50 and the 200 EMA, they're very good for direction. They're not going to confuse you. They're good for direction. You know where the market is headed. Like you see this market, let's see, in higher time frame. I want us to look at 4 hours. This is what is happening in 4 hours. In 4 hours, we have the 50 that is above the 200 EMA. We have this market. We have this market coming to the 200 EMA. We find it forming a very nice W formation, and we had a break here, and that's how we became bullish. Now we have a cross above the 50 EMA, and we are going. So if you knew what was happening here, we are still bullish in the 4 hours. The 4 hour have not changed the moment. The 4 hours we have not had the bearish momentum. We were just coming to retest the 200 EMA, and we have a very nice test of the 200 EMA. You can put this. We have a W formation here, and that's it. We are headed to this position. I cannot. This is not financial advice. I'm just saying this is what I think is going to happen. Like we had a pullback here, now it's a reset. In BTMM they call it a reset. We had now a reset to the 200 EMA in 4 hours, so you know you are going to experience a very nice bump from there. So with this strategy, if you are patient enough, let me say this, even BTMM and this is a simplified version of BTMM. But if you're very patient, with resets, and you only take your trades where the resets are happening, you're going to be very, very profitable. If you're watching what is happening in the 50 EMA, if you're watching what is happening in 200 EMA, if you're watching what is happening in the 800 EMA, because this is 800 in 15 minutes. So if you incorporate BTMM, this is the 200 is going to be the 800 EMA. So if you incorporate this, you are going to be very successful, and only wait for resets when the market is coming to reset. And I can assure you that you're going to be very, very profitable. Unlike anybody who is taking trades from just anywhere, because that is what you don't know. You don't know where you're going to take your trades. You don't know what is going to happen. You're just taking trades anywhere and anyhow. We are also going to be talking about sessions. And gold really love to move very well in New York session. So we are going to be talking about sessions in coming episode. This is just something that I saw like a lot of people would need this information. Some people maybe you have seen BTMM and you don't know how to, you hear too the market has come to reset, but you don't know what reset is. So these are things that I'm going to be talking about, and how to simplify the BTMM, and how to get a very clear entry, or incorporate those entries to whatever you are using. So that is me. I think I'm going to end it here. I wish you the best. This works in anything. You can use it in Euro USD if you're trading Euro USD. Whatever you're trading, just try incorporate this, the 50 and the 200 EMA in 15 minutes. It's good for direction. Whatever time frame you're using, you can even try 5 minutes. It'll also be something. So that's it. You can see here is where we had a cross here. In 5 minutes here, we had a cross here. The 50 and the 200 crossed here. Nice. So what has happened, we have had a pullback to the 50 EMA, and it was a very nice successful trade. So you can use it in any time frame. You can use it in 1 minute. In 1 minute, you can see we had a pullback to the 200 EMA, which is also good. So whatever you decide to use, whatever time frame you decide to use, this is good for you. So try it and let me know if I should continue or I should stop there. Because this is something that is good, and I wish I knew this when I was starting Forex. I started like 4 years ago, and I can tell you I've lost a lot of money. And trying to know things, trying to understand this market. So I'll be trying to say what I've learned, because it's good and it's going to help people. So that's it. Have a nice time.